We had a new client that came in the door in December. We were able to get done a really cool planning strategy. So what had happened for him is he had this IRA balance over here in his risk tank. His business, so this was all pre-tax, his business got crushed by COVID. Like 40, 50, 60, 70% type of revenue declines. Was able to get a lot of good support from the government, PPP loans, EIDL loans. So he's still alive. He's still kicking. He is doing much better today. And even in December, things had started to ramp back up. He's certainly not even close to getting back to square one where he was pre-COVID. So, however, what had happened is he had about $150,000 in his simple IRA plan. We ended up doing some tax planning on the fly because he was not working with us yet. And we said, you know what? Down here in your cash flow, you're going to have a K1 that shows $150,000 loss. So before we did anything, I said, look, you need to move this money ASAP over to a Roth. This is how you can capitalize on a really bad situation to try and protect your future dollars from whatever the government might try to change on us going forward. So what does that mean? He has $150,000 up here in this tank pre-tax. All we did is we left it in this tank. We just changed it from pre-tax to post-tax or tax-free. So we did a Roth conversion. Because he had the ability to deduct this loss from his business on his personal tax return, the net effect of this transaction was zero. So there was no taxes paid on this conversion because 150 of taxable income, which is normally what happens when you do a Roth conversion, was fully offset by $150,000 business loss. This opportunity doesn't happen all that much. You know, this happened in 2009, 2010, 2011, and then it did happen for some folks during COVID. So this client is now fully on board. Like, he is loving life. We're getting into all kinds of things. But again, it also shows you the importance of some of the other parts of the process. So we talk about insurability a lot and protecting your insurability. And Star does a really great presentation and personal story around protecting insurability. Well, we had an issue with this client where from when we did this strategy to today, he's had a health event and he will likely be uninsurable going forward. So again, always remember to not just focus on one quick thing, to get the process going and get all of what you're doing working towards the end goal. But now we built a huge amount of trust with this client by doing this conversion. So now we stepped in and we said, all right, we did our tax plan. On the tax plan, we were able to find an additional $9,000. So what that means is he is now saving $9,000 a year in taxes going forward on an annual basis based on the changes that we made. So from my perspective, that's found money number one. So how I transition that on the business owner side is to say, look, we found this money in the tax code. However, we have 5 other major areas of wealth transfer that we get to look at. Would you like to look at those as well to see if we can find money over and above this $9,000 to get even more savings going into your account?